I'm Amy Gilmette. This is my demonstration speech for CRN number 33931. These are my audience members.
Hey, how you doing?
While training for volunteer income tax assistance, more commonly known as VITA, I learned that estimating your tax liability can give you an advantage for the next year. And in this economy, we all need the advantages that we can get. To calculate your estimated tax liability, you'll need a calculator, a pen, paper, and your current tax rates. First, we're going to fill out the chart, and let's say you're single with no dependents, and your gross wages are $60,000 per year. And you put $1,000 in an IRA, and you'll be taking the standard deduction. You don't own a home and you don't pay state taxes. Also, let's assume this year's standard deduction is $11,000 and each personal exemption is worth $3,600. So you'll put $11,000 here and $3,600 here. And your tax bracket is 25%, and that's the $33,950 to $82,250. And your tax is $4,675 plus 25% of the amount over $33,950. Okay, so the amount here is $33,950, and that's 25%, and that would be your $4,675. And now we're going to calculate how much your taxable income is. If your gross wages are $60,000, your adjustments are $1,000, your adjusted gross income is $50,000. And you bring that down here to subtract your deductions and exemptions, which is $44,400. And that is where your $44,400 will go, to subtract $33,950. And then you'll multiply that times 25% and add $4,675. And your total tax liability for this year would have been $7,287.50. Again, to calculate your tax liability, you take your gross wages minus your adjustments. That'll give you your adjusted gross income. Then you take your adjusted gross income and subtract your deductions and exemptions. That'll give you your taxable income. You'll take your taxable income and plug it into the tax formula. Then you'll have your current tax liability. Do you have any questions?
Should I calculate my tax liability every year, even if my salary doesn't change?
Yes, because tax rates, standard deductions, and exemptions change yearly. Also, your personal life changes may change. Also, your personal life changes may cause your taxable income to change. Any other questions?
How would the figure change if I owned a home or paid state taxes?
Well, you can deduct state taxes and property taxes, and that would lower your taxable income. Thank you.